Wednesday and the Fed announcement that will be impacting millions of Americans all across the country, as this is the last meeting of the year. I have all the details and the full breakdown for you here in the video. Let's get into it and discuss what's going on. First off, can I ask a huge favor of you? Please make sure to like the video with the big thumbs up button right down below. Thank you so much. I really appreciate that. Also, if you haven't done so yet, please make sure to subscribe to the channel as well. Again, with the big subscribe button right down below the video, 100% free to do so. Thank you so much for being part of the community, and let's get into it and talk about it. All right, so Wednesday, rapidly approaching here, and we're going to be getting the all-important announcement out of the Fed because this will be their last meeting of the year. But the big question is, what is the Fed really going to do here? As we wrap up 2024, can you believe it? Here we are already at the end of the year. This is nuts, right? 2024 is zipped right on by. But this is going to be the last meeting out of the Fed, and the big question is going to be doing, now that they started cutting a couple months ago back in the middle portion of September, what are they going to be doing now with this meeting as well? They started the cutting process. That's good, right? They started out with a 50 basis point back in September, the first of the cuts in about 4 years of time, and now they've started this process. Now, obviously, they had their meeting back in November as well, but then also, what are we going to be seeing here on Wednesday? That is going to be the big one, because here's why. The consensus out there is that they're likely going to be cutting another 25 basis points. We'll see what happens here, right? It could be 25, it could be 0, it could be 50, it could be 75. It could be 100. I mean, it could be anything right now. We don't know the details and what they're thinking behind closed doors and what they're talking about. But whatever they do is going to be a signal as to what is going on with the overall economy, especially this time of year as well. Seasonality this time of year, usually this is a little bit of a stronger economic time. Why? Well, obviously, a lot of people are all buying a bunch of stuff right now, right? So economically, the economy does a little bit better typically in the fourth quarter of the year, because there's a ton of spending going on. We're all buying stuff, right? And if we're not buying a ton, at least we're probably buying a couple different things, or at least grabbing some deals and discounts, because why not, right? But here's another thing as well. As soon as we roll over to January, a lot, billions and billions of dollars. It's nuts. Have you ever looked at the statistics behind this? But billions of dollars are returned back to the stores, right? People saying, hey, I don't want this, or I don't need this, or it's the wrong size, it's the wrong fit, it's, whatever, it's damaged. I don't know, all kinds of different things. But we see tons of returns back in going into January as well. So that's not necessarily a good thing economically. But at the end of the day, it's all going to come down to the announcement out of the Fed. So we'll be getting that announcement right away at 2 p.m. East Coast time as far as what their initial decision is on interest rates. Are they going to pause? Are they going to cut again? Are they going to raise rates? What are they going to do? We don't know, but we'll have to wait and see. Now, about 30 minutes later, at 2:30 p.m. East Coast time, we will also be getting the meeting, as in the press conference with Jerome Powell, the chairman of the Federal Reserve, where he'll be answering those tough questions and giving us a better glimpse into it. So this is going to be an important one, okay? Now, here's the thing. They may, considering where we're at now, considering the last couple meetings here, they may come in this one time and just say, hey, we're going to pause and wait. Their next meeting after this is, honestly, I didn't look at the calendar. I'm not sure. I would anticipate, based on what we know now and like when the dates are lining up, I would guess probably early February is probably their next meeting. Again, I did not look at the calendar to see when their next meeting is. I'm not sure the exact date, but I would guess probably early February. It's every 6 weeks, so probably right around that kind of late January, early February timeframe is probably their next one. So they may come in and just say, hey, we're going to pause this time. We're going to wait and see, just see what the last couple rates here have done to the economy, what's going on, and let's just hang out for a minute. Let's just pause for one meeting here, see what happens. We'll reconvene in 6 weeks and see what's going on. Or they cut again, or whatever they do. We don't really know, right? But anyway, remember, how does this impact us? Our money, your finances, your debts, your liabilities, anything, your savings. If you're one of the lucky few out there who actually has a couple dollars saved, if you do, then first off, hats off to you. You're doing good. You're definitely in the minority if you're saving any money right now, versus living paycheck to paycheck, or fixed income benefit to fixed income benefit, whatever your pay is. Again, just if you're saving anything right now, you're certainly ahead of most. Most people are saving absolutely nothing right now. They're spending everything, / maybe even going into debt a little bit more each and every month just to cover basic necessities and basic living expenses. But anyway, how does this impact all of us? Well, generally about 30 to maybe 45 days or 60 days or so after an interest rate cut is usually when we start to see the effects of these cuts on our finances. So that's kind of a good thing. And again, anytime that we are dealing with any type of variable interest rate, like a credit card, a line of credit, a HELOC, a home equity line of credit, anything, if you're locking in new fixed rate mortgages or loans or auto loans, student loans, whatever it happens to be, anything that's adjustable, that'll adjust lower as the rates get cut. So when the Federal Reserve cuts interest rates, they're cutting the federal funds rate. What that basically means is lending bank to bank. Okay, it's kind of what that is, kind of like the overnight rate, right? But anyway, then it all translates back into consumer loans and debts and interest rates as well. Does that kind of make sense, right? But here's the cool thing about it as well. Well, okay, let me take that back. It's not cool, but let me just say another thing about this. Like I said a minute ago, if you're one of the lucky ones who's actually saving any money right now, not only does this lower interest rates on debt, but it also lowers interest rates on savings. Have you noticed that? If you have a savings account, the last couple of years here when the interest rates were very high, interest rates on savings accounts were also pretty high. You could easily get a 4.25%, 4.125%, maybe 4.5% on just a basic savings account last couple of years here. Been kind of nice, honestly, if you've been able to save anything, even $100. That 4% or 4.25%, whatever it happens to be, actually adds up kind of quick. It's kind of cool, right, to have that. But now, as interest rates are also being cut and being brought down, the interest rates on savings accounts are also being brought down, right? Just imagine how that works, right? So anyway, that is one of the other negatives about them cutting interest rates. But at the end of the day, there's way more people that are working with debt, who have consumer debt, who then actually have money in savings. So for them, cutting interest rates would actually save people more money just by basically paying debt service versus actually getting more interest on a savings account. Does that make sense? So it's going to help people way more to cut interest rates just to lower payments on debt products and debt service than actually collecting a few pennies because of a couple bucks saved in a savings account. But anyway, so that's what we need to watch for on Wednesday here, and this announcement will be coming out. So either way, I'll keep you posted. And again, this is the last meeting of 2024, and then we'll roll into 2025. And again, right around that February timeframe is when their next meeting will be, give or take a little bit. But it's going to be good. At the end of the day, let's just hope that they keep cutting here. It'll be helpful to a lot of people. Our finances, our budgets, all these things helps out in a big way. So anyway, hope this helps you. Again, please make sure to subscribe down below if you haven't done so yet. Totally free to do so, 100% free. Thank you so much. Really appreciate you being part of the community. Otherwise, like the video, big thumbs up button down below. Thank you. Really appreciate that as well. Otherwise, check out the other videos here on the channel. 5,000 plus videos in the video library. The ones I've hand selected for you down below in the description at the top of the comment section. And right now showing up on your screen as well. You'll see some videos there. Check those out. Thank you so much for being here. Really appreciate it. Happy holidays as always. Hope you're doing well. Just, I'm here for you no matter what. I know it's rough out there. I know it's frustrating. I know we're all kind of feeling down right now. It's okay. I'm here for you, okay? I got your back. I want to do what I can for you. You got to stick together. Thank you so much for being part of the community. Enjoy your day.